A very warm welcome. Thank you so much for tuning in. You're just in time to catch us here on 3T TV, Thika's #1 online news channel, where we are telling the Thika story as it is. My name is Juliet Modoni, and today I have yet another exciting and informative episode. Remember, we are coming to you from Edgewood Country Place that is located in Maboromoko, that is off Gatanga Road. It is your one-stop shop for a photo shoot, a video shoot. Better yet, on a Sunday, you can bring your family for a family fun day. We have not forgotten the corporates as well. They have good grounds where you can bring your team for a team building exercise. Be sure to check them out. So last time we had a conversation on customer retention, attraction and retention. And after you've attracted and retained those customers, you need to find out how you're going to keep your business running. So today we are going to have a discussion about how to help businesses get funding. So let's dive right into it. How are you doing?
How are you, Modoni? How are you?
I am fine, thank you. Thank you so much for finding time to come and talk to us.
Okay, it's my pleasure.
Last time, we spoke about customer attraction and retention. Before we dive into our topic today, kindly introduce yourself.
All right. Okay, my name is Wambui Kabita. I'm the founder of Fempreneur Kenya, which is a movement that nurtures, mentors, and grows women in business by equipping them with business knowledge and skills, while at the same time also connecting them to networks and access to markets. I'm happy to be here today.
Awesome, awesome. Equipping them. Now, last time we spoke about customer attraction and retention. And now after you've gotten the clientele, you know you need to keep your business going.
Yes.
And many young people have been complaining that they start a business, but they are not able to get funding for the businesses. Please take us through how you can go about getting funding for your business.
Okay, thank you very much. First of all, yes, access to capital, access to funding is actually a very major challenge to all the startups, all the young businesses, not just in Kenya, but globally. And the reason access to funding is not there is because most of us as small businesses operate, I would say, informally. We are not registered, we don't own bank accounts, and we don't keep records. So you go for a facility or you want someone to lend you, you cannot actually give a clear direction of where your business is heading. You have no business plan, your vision is not really clear. And then finally, we also are accused by lenders that we don't have collateral that would actually use as security whenever we are given loans. Yes.
Oh, those are the major challenges that small businesses face.
Yes, those are the challenges that actually stop lenders or make lenders shy away. We are termed as high risk. When you're a small business, a lender looks at you as a high risk to the business. I might give you money, and you know we also have the mortality rate of businesses, which is 0 to 3 years. And this is the time this business actually needs the money to run. So that is why the traditional, I would call it the traditional bankers, the circles, actually shy away from lending to startups. Yes.
And now, how can we as small businesses go ahead and make that right?
Okay. Yeah. What I normally say is, as a young entrepreneur, the best and the surest way is something called bootstrapping. That's actually funding yourself with your little savings. Remember our first episode, we talked about starting with what you have and growing organically as opposed to borrowing. It's called bootstrapping. And when you're doing that, you could also use something called the pre-order system. That comes with integrity. That I've just started out and I probably import goods or I get goods from, I'm an online seller. You could look for a group of people who trust you and ask them to prepay for the goods at a lower discount. I've seen publishers, people who do the cookbooks, asking people to prepay or pre-order the books. Then you'll get them at a slightly lower price. And what this does, it actually gives you working capital. So with that kind of money, with the discounts you've given, it gives you the working capital to be able to run with your project. Then, number two, if you can't get money from yourself, the other best option as a young business person is to borrow from family and friends. Because These are people who will not give you pressure. These are people who understand where you're coming from. These are people who will not even most likely ask you for collateral. But of course, you borrow with an agreement of repaying, and it also has flexible payment terms. Then we can go now further to further out here. We have something called crowdfunding, and it's really catching up in Kenya. We have organizations that do that. Crowdfunding is basically what we call harambe. Yeah? But in the US, in other countries, they call it crowdfunding, and they really use it to fund startups. So there are so many crowdfunding sites. You can Google them, register your profile, and what happens is it's a group of people. Everyone gives small amounts of money towards your project, but it's directed through an organization. Then you're given your money, which now you're supposed to, of course, definitely repay. That is what there is crowdfunding. Then we have what is called grants. And note, what I'm talking about is for early stage. Early stage is that the businesses are at 0, maybe to a year. Before you get a year, before you stabilize, 1 to 2 years. These are the early stage organizations. Then we have things called grants. And they have they actually call for proposals, and they're also quite a number and catching up in Kenya as well. The beauty about grants is most of them fund from idea stage. You don't have to have anything, as long as your idea is scalable and is able to actually bring in returns after a while, as long as you have a clear vision. And I'll give an example right now. For those of you who don't know, we have the Tony Elumelu Foundation. The grant is open, where you pitch, you go through a robust training actually. Yeah? So they are there, and it's not easy money because you have to go through training. Before they give you that non-refundable grant, they have to be sure that you'll use it for business and you actually understand the concept of business. Yeah.
So you have to have a solid idea.
Yes, a solid one, a scalable one, because okay, at the end of the day, it doesn't really matter, because as you're doing the training, you're able to be taught how to attract the right customers.
Right.
Yes. So does this idea of mine actually solve problems in society? Does it create social or environmental impact? So it has to be scalable. Where do you think you'll be in the next 2-3 years? Yeah.
Okay. Do you, you've talked about Tony?
I've talked about the Tony Elumelu Foundation. This one is the one that is open. Right now, it's currently open for African entrepreneurs, and it's closing on 31st March. So go and apply. Some of us are beneficiaries of the program when it started. Yes. Then going further, you know, most of our young entrepreneurs, and you can't rule out that, yes, we are doing small businesses, but there's also a very, very large number that is focusing on tech, the tech angle of startups. Now, where can you get funding? There is something called private investment. And again, there are also very many in Kenya. That private investment is either private equity and also angel investors. Now, the venture capitalists are the firms. It's a firm that says, now look, I'll look for scalable businesses. Does your business have a high growth potential? They come in and put in their money, but in exchange for shares in your company, in exchange for shares or equity, and they also take part in decisions of your company, so they help you grow. So in private equity, you can either be a venture capital firm or an angel investor. An angel investor is basically an individual who is either wealthy or has the money to put into a young farmer. And of course, they sit on the board, they give you direction. And I would personally say, when you look at Silicon Valley, that's how most of these American companies that are coming in, most of them are funded by the private equity firms. And people argue and ask, nitapeana kampuni yangu, you know, but I always say, you better own 50% of something than 100% of nothing. There are so many people with business registration certificates, with businesses that don't take off the ground. And remember, these private investors also give you they have high net worth contacts. So of course, if I give you money, I'll make sure I want this business to succeed. Yes, and in Kenya, there are quite a number of examples. Even something like Facebook. Those are people who grew. Google, they've grown because of investments from private investors. Yes.
Wow. So you're telling us to open our eyes and our minds and accept.
Yes.
To, you know, let somebody else come in, and we should not look at it as if tunapeana biashara.
Yes, you're not actually giving. And I also want to challenge I would say, the wealthy, the entrepreneurs who in this country to invest in small businesses, because it's happening in other countries and that's why they are growing and coming to Africa. But it's about time as Africans we also change that narrative. Why can't you invest the extra money you have in a young business, give this person direction, because it's actually catching up in many countries, even in Africa. Yeah.
But I see probably mostly the problem with us is we are always in competition.
Thank you. Thank you.
That is the biggest problem we
Biggest,
have.
yes. We compete with each other, and at the end of the day, you know, they say you can walk fast when you're alone, but you can go far when you're many. So last time we said we need to change that narrative. We need now to start impacting the younger generation better than how we were mentored. Yeah.
Sure. Let's go on.
Yes. Now, what we've talked about were options for an early stage fund, early stage enterprises. So you've probably now maneuvered your year one, year two with your savings or with the source of income you've had, and you're now at growth stage. Now that is where your banks come in. You know, people say banks don't lend to startups. I went to my bank and they told me they can't lend me. And it's actually true. Why? Because banks are in the business of lending and recovering money. So before they give you that money, they have to make sure that you're able. And by banking, I mean the mainstream, the regulated, the banks, the microfinancial institution, the SACCOs, the ones that are regulated by the CBK. Yeah? Those ones now, those ones now can give you a business as long as you're able to prove your viability. And I'm assuming by the time you're 1 year, 2, you have your records right, you've done your registration, you're now banking. So you have a history, you have good credit history. So when you go to your bank, I want to now tell you what the banks look at when they are, yes, so that you don't say my loan proposal was rejected. It's actually very simple. Character, that is the first thing. So you walk into the bank, how you walk into your loan officer's desk, how is your personality? And if it's a business, how is your business? And we say nowadays people just need to Google. Are people complaining about the service? And you can't, as a small business, you cannot differentiate your business persona and your personal persona. So how is your character? Because your character determines, first of all, that is the first thing that determines whether you'll be able to pay back that money. Yeah. So when you're being asked questions, are you truthful? So I don't know, people think that you need to lie or create fictitious figures when you're dealing with the banks. No, just be honest, even when you're talking to your loan officer. Number two, do you have the ability? Do you have the ability to pay that loan? Do you have the ability to even, the capacity to even borrow? So if you're able to demonstrate the ability, how is your business running? What are your profits? You need to actually give a clear picture of how your business is running in terms of cash flow, in terms of do you have any creditors, do you have any debtors, so that your bank is able to know whether you have the ability to repay that loan. Means, the other thing is the means. Will your business be able to function well after the loan? Or will this loan come to mess up your product, your operations? You know, there are people who get loans, and this loan actually messes you. I don't know whether you've encountered such people. Someone tells you, I went and got a loan, and after that, I think you're not able to comfortably meet the installments. Your business is not able to actually make more money to be able to repay. Because remember, banks need to be repaid their loans. Then they'll ask you for a purpose. You don't say nataka loan because I just want a loan. And most people would never know what is the purpose of your loan. Is it working capital? Is it for a tender? The reason you're asked, and you need to have a clear purpose, is so that you get the right product. You know, when you talk about loans, when you walk into a bank, you know you need money. But these loans have different products. You could be asking for a term loan, which needs to be paid every month. Sure. But actually what you needed is an LPO financing, that you'll just pay maybe the principal and interest after the 30 days or 60 days period. So you'll end up being in arrears because you did not actually clearly give out the purpose of your loan. Then, now, well, how much do you want? Before you walk into your bank, do your tabulation. This is the money I want. It's going to be enough maybe to buy my machinery or to grow my business. And the reason is, if you're underfunded, chances are likely you will not be able to do what you want, of course, and the lender will lose out. If you're overfunded, chances are you'll maybe even divert the funds to go and do other things and not concentrate on your business, and again the lender is going to lose out. So there's a chance of, if you're not clear about the amount of money you want and how much you've contributed to it, if you're not clear about that, chances of underfunding you or overfunding you actually might occur. And that one, of course, the loss is to you as a business.
And I think that can go back to where you had said there's some people who get loans, but you know that loan is not able to help them.
Yes.
They probably they were underfunded.
Exactly.
So to speak.
Yes.
Okay.
So before you go to the bank, you need to sit down actually and ask yourself, how much do I want? Is it enough for this project? Do I need some extra money maybe to move around? Because the minute you get underfunded, then everything else gets messed up. And remember, the bank is expecting its payment, maybe a month or two, for you to start paying the installments or for you to start paying back. Then there is the issue of repayment. Are you able to repay that loan? Are you able to comfortably repay that loan? I've had people complaining that nikienda kwa bank, I'm asked so many questions. They even ask me for my electricity bill. They ask me for my water bill and my rent. There's a reason that is asked. It's because in as much as the bank or the lender wants to be paid, you need to be able to, we say, comfortably meet that installment. That installment should not strain you, because if it strains you, the minute you have a loan and you're not able to pay your house rent, pay your office rent, pay your workers, then that way, definitely you will not, that one it's actually more counterproductive to your business, I would say that. So you need to be able to comfortably meet the installments, and that is why now you're asked for your utility bills. So this is what I pay, this is what this is what I do, I pay my workers, these are my expenses generally. So in structuring the repayment, are regulated, and I'll say are regulated because I'll touch on the issue of Shylocks. A regulated institution actually has to look at all that. Yes. And then finally, and you'll note where I've mentioned it, there's the issue of security, your collateral. Now, in case now we've looked at you, we've seen, yes, you'll be able to pay, your business has the means, but things happen. Just in case you're not able to pay your loan, the bank needs security. And this security could either be in form of maybe movable and immovable, as land, then there are cars. But you could also be told, go bring someone who will guarantee you.
Sure.
Yeah, and for the people who just fill the guarantee form without knowing, you actually, by filling that, signing that document, you actually say that you know this person well enough that in case he or she is unable to repay, I'm willing to take over that debt. So there is an issue of security. And why I'm insisting on that, I've had many people say, I have a car. Let me take it to the bank, you know? But that's why I'm telling you, the bank first looks at your ability. It's not that logbook that will pay your loan. And also, to now go back to the issue of regulation, there are so many, I would call them Shylock, with very fancy corporate names.
Sure, they are mushrooming everywhere.
And they are the ones that are killing business, because now those ones will ask you, do you have a car? In fact, that's the first question. Someone told me they ask you, do you have a car? Do you have a title deed? Now, here is the money. Already, when someone dangles money as a business person, you're already thinking that you can do so much with this money. And they have unregulated interest rates, very crazy, 30%. And so definitely you will lose your property. So note that if your security is normally like the last thing. Once you've been appraised and the lender feels like, now we can give you the money. At that point when you're asked, okay, now we'll give you this amount, but we need this as security. Yeah.
That's an eye-opener. So it's not the way we are used to when you go and they ask you for your logbook.
Yeah.
They just ask you, just come with your logbook and you get everything. So that should actually be the last.
Yes. When I ask you to come with your logbook, I've not even gauged your ability. Are you able, if I give you 400,000, 500,000 just because you have a logbook for your business, and you take it and you've not even thought about, before you borrow, you need to actually have a very, like you said, a clear outline of what do I want to do with the money? Actually, if you don't have a business plan, where am I going to go 2-3 years down the line? Where will my business be? But if I come and ask you, give me a logbook, Juliet, you'll have, we have so many issues. You'll just say, okay, give me the
logbook.
money.
Yeah, I just give you my logbook.
And you remember, once you're not able to pay, the interest keeps rolling and rolling. So at the end of the day, it's like you've given that vehicle or that title deed of yours. Yes.
Wow, that is quite an eye-opener. Now, what then, in light of all these issues we've discussed, would you advise young people in terms of funding? Like we have said, there are very many, I don't know whether to call them financial institutions that are mushrooming,
yes,
and they're giving people loans left, right, and center. what would you advise young people who are looking for funding for their businesses?
Okay. First of all, I would ask you to be very cautious with a lender who comes with the issue of security first. With a lender who comes and, here they give the money within a few hours.
24 hours?
24 hours. So, whenever you go to an institution, and these questions, like I've told you, you'll be asked where you live, how much money do you pay for rent, it's because the repayment is not supposed to actually cripple you. That is a regulated financial institution. So you need to be very careful in terms of interest rates. Some of these people saying 30%, give you 30% per month. So you actually need to, how much are you borrowing? How much is the interest rate? In fact, in the loan application, ask how much are the loan application fees? Because at the end of the day, you find them charging even 10% of your loan and they cut it off that this is the loan application fee. But we are I think we are the microwave generation where we want quick.
Sure.
Yeah. And I think it's here you featured someone who said that they got some money they didn't need and things just went on a downhill after that.
Yes.
So be very, very careful with unregulated lenders. You'd rather go to your bank. And like we've said, though we've taken you through what is required, and if you still feel like you're not bankable, there are things called self-help groups, and women are very good with the chamas. Men, I think, are also starting to do that. Organize yourself with your peers. There are people who will say, I don't have anything. I don't have, even when I go to the bank and they ask me for security, or maybe my business is still not bringing in money. Put yourself in self-help groups. Now, these groups, of course, definitely you'll register the group. What happens is you can be able to get money as a group. And not just as maybe a group. You can be able to get money as individuals in the groups. Why? Because they use something called a social guarantee. The fact that we've come together as 10 people, maybe we live in the same neighborhood or we know each other. So we cannot, what financial institutions do, we'll only give maybe 5 at a go. So if you want, I'll tell you, so-and-so has not paid. First of all, make sure they pay. So they put pressure on each other. So it's the issue of social guarantee. And you can approach, government also has the Youth Enterprise Fund. We have the Women Fund, the Wezo Fund. I don't know whether the Kiambu Biashara Fund is still there, but it was there, it was operational. So they are the ones that give actually in group model. They use a group lending model because they understand young people have a challenge in terms of financial statements. They have a challenge in terms of collateral. Yeah.
Mm-hmm. It's the same thing like when you're applying for a job and they want somebody who has 10 years experience and you just graduated from school and probably just did internship.
Yes.
I think it applies the same.
Yes.
And it boils down to what we've always been talking about when it comes to borrowing, integrity.
Exactly. Integrity is key. And you also need to know, for you to continue growing, because maybe I'll come and borrow maybe 100,000. My repayment history, how I repay that loan, will determine whether next time I'll come get a higher amount. So there's something also they look at called credit history. And those people who borrow and maybe from the loan apps and you don't pay, and you're listed at in the CRB, there's something, your credit rating, of course, definitely gets low. Those are the things that reduce your chances as a borrower, because the communication is, this person is a defaulter, this person will not pay the loan. And some of them actually do it deliberately. I've seen somewhere where you borrow from an app and they say, and okay, delete it now and don't pay. But you don't know the consequences and the impact that small act will have on your business or as you're growing. Yes.
Awesome. Thank you. Those are very good lessons and pointers to learn when you're looking for a business. I don't know whether there's anything else you'd like to add as we go to the conclusion of this discussion.
Maybe I'll just tell our young people I'll re-emphasize on the need of the bootstrapping. Start with what you have, because this one, no one will give you pressure. If you have your 1,000, go and buy your little stock and sell. Grow with what you have, because that's the easiest way. The entrepreneurship journey is not easy. So you can have your projections, we call them straight line mathematics, but they are ups and downs. But when you owe no one any money, then you definitely be able to focus on your areas of growth. Yes, yes.
Okay. You've been in this entrepreneurship journey for quite a while yourself.
Yes, I have.
I'm sure you've seen success stories.
Yes, I have seen quite a number. Yes.
Of young people.
Of young people who started. In fact, we need to start featuring some of them. You know, when they say sometimes you can do all talk. We need now to start as a show featuring the young people in their places of business, so they can tell us. Yes, so that they can share actually with the others or on the journeys, the entrepreneurship journey. Yeah.
Awesome. Now, there's probably somebody who is watching and would like to contact you. Kindly give a contact through which they can reach you.
Okay. My social media handles, that's Twitter, Instagram, and Facebook. It's at Wambui Kabita. You can reach me on 0777 996010. Thank you.
Thank you so much for your time. Thank you. Ladies and gentlemen, that was Wambui Kabita, who is an expert in matters SME, and she has told us that loan repayment should actually not cripple you. I hope you have learned a thing or two and that we have given you a good reason to subscribe to 3T TV. I have been your host, Juliet Modoni. Until next time, take care.